Hey everyone, and welcome back to the channel. Today we're diving deep into the world of semiconductors, a space that's absolutely exploding thanks to artificial intelligence. And one of the biggest players, Broadcom, just dropped its latest earnings report, and boy is there a lot to unpack. The numbers are big, the growth is staggering, and the story behind it all is even more fascinating. So stick around as we break down what Broadcom's latest performance means for the company, the industry, and the entire AI revolution. Let's look at the headline numbers. Broadcom reported fourth quarter results that blew past Wall Street's expectations. We're talking adjusted earnings per share of $1.95, beating the $1.86 that analysts were looking for. On the revenue side, they pulled in a massive $18.02 billion, comfortably ahead of the $17.49 billion estimate. Right off the bat, these are strong signals that the company is firing on all cylinders. But here's where it gets really interesting. Despite these fantastic results, the stock had a bit of a roller coaster ride in after-hours trading. It initially popped, which you'd expect, but then it actually dipped by over 4% during the earnings call. Why would that happen? We'll get into the potential reasons a little later, but it highlights just how high the market's expectations are for these AI giants. Good isn't always good enough when you're playing at this level. The real showstopper in this report is Broadcom's forecast. The company projects that its revenue for the current fiscal first quarter will be around $19.1 billion. That's not just a small beat. It's significantly higher than the $18.3 billion that analysts had predicted. More importantly, this represents a 28% year-over-year growth. In an industry this large, that kind of growth is simply phenomenal. And what's fueling this incredible surge? You guessed it, artificial intelligence. CEO Hock Tan stated very clearly that they expect AI chip sales this quarter to literally double compared to the same period last year. That's a jump to $8.2 billion just from AI-related semiconductors. This includes not only their custom AI chips, but also the critical networking components that make massive AI data centers possible. Let's put this into perspective. When people talk about AI chips, the first name that usually comes to mind is NVIDIA. And for good reason. They are the dominant force. But Broadcom has quietly and effectively positioned itself as the other major beneficiary of this AI gold rush. While NVIDIA excels with its general-purpose GPUs, Broadcom has carved out a massive business in creating custom-designed chips for specific high-volume customers. The company's stock performance tells the story. So far this year, the stock is up an incredible 75%. And that's after it already doubled in price last year. This isn't just market hype, it's a reflection of tangible success. Their custom chips, like the tensor processing units, or TPUs, that they build for Google, are gaining serious traction as powerful alternatives to NVIDIA's GPUs.
Right.
This custom chip strategy is where Broadcom's genius really shines. Instead of trying to compete head-to-head with NVIDIA on all fronts, they partner with tech giants to build bespoke solutions. And during the latest earnings call, they dropped some major bombshells about this part of their business. First, they confirmed they've signed on a fifth major customer for their custom chips. They didn't name them, but adding another heavyweight to their roster is a huge vote of confidence. Think about it. These are some of the biggest tech companies in the world, and they are choosing to partner with Broadcom for their most critical AI hardware. But the even bigger reveal was about a previously unnamed customer. For a while now, there's been speculation about a mystery client that placed a massive $10 billion order for Google's TPUs, which, as we know, Broadcom helps design and build. Well, the mystery is over. Broadcom revealed that the customer is Anthropic, one of the leading AI research and safety companies. Yes, the company behind the AI model Claude. This is a huge deal. It confirms that Anthropic is betting big on Google's TPU architecture, and by extension, on Broadcom's custom silicon capabilities. CEO Hock Tan even specified that Anthropic is using the latest generation of TPUs, codenamed Ironwood. This isn't just a one-off order, it's a deep strategic partnership. Investors have been watching this space very closely, and this confirmation shows that these major AI players are not just talking about custom chips, they are actively buying and deploying them at a massive scale. Just to give you a sense of the momentum here, back in June, Broadcom said they had 3 custom AI chip customers and 4 more prospects. By September, they had secured a 4th mystery customer, which we now know was Anthropic. And just a month after that, they announced a partnership with OpenAI to develop custom chips. Although Hock Tan was careful to manage expectations, stating he doesn't expect significant revenue from the OpenAI partnership to materialize until 2026. This strategy of creating what Broadcom calls XPUs, or custom AI accelerators, is a key differentiator. Hock Tan explained that these major customers prefer to control their own destiny by creating their own custom hardware, rather than relying solely on off-the-shelf solutions. Broadcom is the go-to partner to make that happen. The demand is so high that the company currently has a $73 billion backlog for these custom chips, which is other data center components needed for AI. That's a $73 billion pipeline of secured orders set to be fulfilled over the next 18 months. That's an astonishing number that provides incredible visibility into their future revenue. So let's break down the revenue a bit further. The company's total revenue grew by 28%, and as we've established, this was largely driven by a 74% explosion in AI chip sales. These sales fall under their Semiconductor Solutions business segment. That segment alone brought in $11.07 billion in sales, a 22% increase year over year, and well above what analysts were forecasting. This is the core of their hardware business, and it's absolutely on fire. But Broadcom isn't just a hardware company. They also have a massive infrastructure software business, which was significantly boosted by their acquisition of VMware. This segment also posted strong results, with sales growing 26% to $6.94 billion, also beating Wall Street's expectations. This diversification provides a stable, recurring revenue stream that complements the more cyclical nature of the semiconductor industry. The successful integration of VMware and the growth in this software segment is another key part of the Broadcom success story. Finally, for the investors out there, Broadcom also showed its commitment to returning value to shareholders. The company announced it's increasing its quarterly dividend to 65 cents per share, up from 59 cents. This is a sign of a healthy, confident company that is generating a ton of cash and is happy to share the profits. So let's circle back to that initial stock dip. With numbers this good, why the hesitation from the market? There could be a few reasons. One is simply the buy the rumor, sell the news phenomenon. Expectations were sky high, and even this stellar report might not have been enough for some investors who were hoping for an even bigger surprise. Another factor could be concerns about the broader economy or geopolitical risks that always hang over the semiconductor industry. And finally, investors are likely scrutinizing every word from the CEO, looking for any hint of a slowdown, no matter how distant. But from where I'm sitting, the long-term picture looks incredibly bright. To sum it all up, Broadcom's latest quarter was a masterclass in execution. They beat on earnings and revenue, issued a blockbuster forecast driven by a doubling of AI sales, and revealed major new customer wins, including Anthropic. They are successfully executing a brilliant dual strategy, dominating the custom AI chip market as the key partner for tech giants, while also building a robust and growing software business. They are no longer just in NVIDIA's shadow. They are a co-leader in powering the AI revolution. The $73 billion backlog for AI components is a clear indicator that this growth is not a short-term blip. It's a sustained trend. What do you think about Broadcom's performance and its strategy in the AI space? Do you think their custom chip model is the future? Let me know your thoughts down in the comments below. I'd love to hear what you think. Thanks so much for watching. If you found this breakdown helpful, please give this video a thumbs up and consider subscribing to the channel for more deep dives into the tech and finance news that matters. I'll see you in the next one.